Welcome to Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of Yellow Tunnel, and today we're going to have our weekly strategy roundtable discussion where we talk about current market conditions. We're going to talk about NVIDIA earnings, initial claims, JOLTS data, and unemployment data on Friday. Look at the interest rates and decide, what to expect short-term and medium-term. Has the market reached the top, or are we going to continue going higher, or is it time for a pullback? Disclosures are very important. I'm going to go to specific trade ideas, so I encourage you to read the disclosures. If you're new to trading stock or options, you can visit this link, optionscreening.com, to understand the risk and suitability of trading stock or options. Tim, let me know. Can you hear me? Can you type in? Or Peter, can you type in if you guys can hear me and see my screen? Just want to make sure that the video and audio is working. Let's see, audio. Looks like it does. But if you guys can hear me, just type in yes or no. All right, and you can always pause the screen and read the remaining of the disclosures. I hear it, Tim, perfect. Thank you. All right, so before we jump into trading psychology, let's talk about current market conditions. SMR that Tim is trading, and let's look at SPX. Okay, so this is cash settled index spiders. We're trying to break to the new highs, right? Maybe marginal new highs for the months of May and June, and retesting 6,000 level, right? Retesting 6,000 level. So there's a lot of positioning at 6,000 level, and that's been an overhead resistance so that bulls are unable to break through. In terms of interest rates, which I think is the most important indicator, they did pull back. We had a sharp rally on interest rates on fear of, escalation in tariffs. That's going to create more inflation, and the interest rates are going to continue high. But since then, the 10-year pullback, the 30-year pullback, especially after a bad week, 20-year Treasury auction that happened last week. So rates are stable, and SPX is trading trying to break through this overhead resistance around 6,000, which we are basically 23 points away. So the question becomes, in terms of spiders, where are we heading, right? You can see 6,000 level. This is a gamma exposure for those of you who are new. Blaine, thank you. For those of you who are new, I do use options data. I do a lot of option trades, but I also do stock trades, right? So I don't want to, sometimes people ask me, do you trade stock or do you trade options? I trade both. But I think option data is very important because it shows you positioning data, right? It's important to understand in trading the concept of game theory, right? The game theory basically says, it doesn't matter what I think or what you guys think. What matters is what majority of the people think, right? And that data is one way to express is to look at the futures and options market and see where most of the which level they're buying. So right now, you can see the most prominent positioning is at 6,000 level in SPX, which is exactly where we are approaching. And this is what is called call wall, right? Basically, it's a combination of both puts and calls, but the idea that this is your main resistance, right? And after that, with one standard deviation, you don't have a lot of positions, so we could get, and this is all-time high, right? Resistance number to 61, 61.50, this is all-time high. So those are the main resistance levels. Support, we've seen 5,900 has been a good support, right? And the 5,800, right? So based on the demand and supply, if you look at the one standard deviation, right, between now and this is the data, most of the contracts are in June. So we're talking about end of June, maybe beginning of July as we approach in the earnings season, right? If you look at the distribution of possible outcomes, right, one scenario, right, we are at all-time high, right, or higher, right? That's scenario number one. We're moving beyond one standard deviation move. It could happen if unemployment data continues to be positive, right? Or maybe we could reach an agreement between China and United States, or macroeconomic data continues to show the resilience in the macroeconomic data, right? Hard economic data. So then you could have one, right? So that's scenario number one. Scenario number two, no, we're trading in this range. I mean, we could make marginal highs, maybe 6,100, but still majority of the time, we're gonna spend where we are now, right, in this range, right? That's scenario number two, right? 1 sigma move based on the, option supply and demand data uh, going into end of June, May. So that's scenario number two. And scenario number three, signs of recession. Maybe Friday unemployment data ticks up, right? If all of a sudden we have a sudden employment has been cooling, right? Housing data has been cooling, retail data has been cooling, manufacturing PMI has been cooling. So the data is pointing that deceleration in the economy, and everybody is waiting for the hard data to appear. And the hard, even though some of the surveys shows that the confidence level is deteriorating and people expect a recession, but it hasn't been shown in the hard economic data like services data or employment. That's this Friday. So that's scenario number three. If we have a negative surprise, right, then you could have a pretty sharp drop, and you can see there's not, compared to the calls, right, the magnitude of positioning, these levels may or may not hold, right, level. So that's the main exercise we usually do in the live trading room, whether you're doing short-term trading or long-term trading, right? You basically go through this future rehearsal exercise, right? You basically say, if I'm hold position for a few weeks or a few months, I'm looking at the daily data. If you're more of an aggressive short-term trader, you might just look at the same range, but for next couple hours, couple of days. But the exercise is the same, right? Let's say you're bullish and you think we're going to reach all-time high. Well, how much money am I willing to risk to support my opinion, right? And that's where you need to find these support and resistance levels. You can use obviously options data, or you can look at the, this corresponds, 5,800 is about, I think this is 200-day moving average now, right? This is 200-day moving average, and 57 is about 50, right? We had a black cross, right? Traditional that called death cross, black cross, death cross, basically considered to be bearish signal in the, if you're a pure chartist, right, pure technical analysis, this is a pretty bearish price pattern because of the sell-off in April, right, due to the tariffs. So this is still inverted, right, where 200-day moving average is greater than 50. But these are important support levels, right, which you can also use them as a level. So how many of you say one, right? How many of you say one, Vlad, economy is fine, earnings are growing, we're going to reach an agreement with China, tariffs are under control, we're not concerned about the debt, right? And dislocation in, repo markets, and 20-year treasury auction was just a one-off, and they're going to be fine, right? So scenario number one, right? So type in scenario number one if you think that between now and, let's say, next earnings cycle, end of June, middle of July, we're going to reach all-time high. Similar to 2018, right? This is a 2018 scenario. In 2018, during first administration, this is where we were trading in June, July, right? We made new highs despite the war of, tariffs war with China and European Union. Scenario number two, no, it's not going to be like 2018. We're not in recession, but for every good news there's a bad news, right? Whether the housing market is weak, whether it's still elevated interest rates and hard to borrow, or whether it's AI digestion, right? Nvidia earnings, they're not breaking out. Broadcom earnings coming up, they're not breaking out. So we're just trading in the range. And scenario number three, no, unemployment data is going to get worse, sooner than everybody thinks, right? Some signs of recession or hyperinflation. All right, so how many of you say two? Tim, two? Okay. Blaine, George, Mark, Dr. Simon. Dr. Simon, thank you for being here. Peter, what do you think? Tariq? Anyone else? Blaine, 2. Okay, 2. All right, I'm gonna go with 2. I agree. I think, I mean, we may or may not break 600 level by third Friday, right? This is most of that positioning is June 20th, right? This is June 20th. I don't think we're gonna break it by June 20th, but by end of June, maybe going into the next earnings season, we could get there. But for the most part, we're spending time in the range. But if I do see between now and August, right, if I do see that we are at new highs, right, 6,200, 6,300, I would not be surprised. But I still think we're going to have a repeat of last year or past couple of years, where the market rallies in May, rallies in June and July. Then the earnings cycle is over in July. People realize there is really no positive catalyst. Liquidity dries, and then you do have pullback like we had in 24, 23, right? Where August, September, October, we have a pullback. And that will coincide with a 90-day delay in tariffs, right? I assume the tariff war is not going to just magically disappear. So this warrants to be kind of cautiously optimistic, but not have too much exposure to the market. Right now, I think the best strategy, Nick and I agreed on, buy into pullbacks. If you see a pullback, I think they're going to be short-lived, whether it's 5,900, 5,800, 5,850. These are all buyable levels, especially 5,800. Right, that's been a strong. There used to be resistance, and now becoming a strong support. Any questions? All right, how do we help on Yellow Tunnel? So we have different services, right? We have different services on Yellow Tunnel. Some of them are paid, some of them are free. So let's talk about paid services. These are our models, right? So we have two services where it's an output of our models. It's an AI models using neural networks and learning on the price data and the volume data and the earnings data and making predictions for short-term or long-term. So aggressive power trader, the model runs every single day, right? Each day the model runs and produces results, right? And you can look at the history of these signals. Every day there is a list being published. So today it's eBay, Nucor, and Philip Morris, right? So you can basically go in and look at, Philip Morris, right? And you can see it's a strong uptrend. That has been a good place to hide, right, for dividend and continue growth. So on a pullback, maybe this is a candidate to buy, right? And similar eBay, right? Strong uptrend continues to go higher, another up 2%. So, these are the signals that you can use to trade. If I trade them, you would see them under orders, right? So yesterday, let's say there was, I think, CrowdStrike and Zscaler, right? CrowdStrike and Walmart, right? So I actually take some of these signals, right? Not all of them, but some of them, and then I would trade them either in Profit Accelerator or Dynamic Power Trader. Profit Accelerator stocks, mostly stock trades. Dynamic Power, mostly options, but combination of both. So you can see in the past 7 days, CrowdStrike. Right? So I did CrowdStrike trade. I bought it for 67, trim at 480. So it was a good trade based on CrowdStrike signal and Walmart, right? And these are recent trades. All right, bought it at 98.26, trimmed at 99.20, and trying to exit completely at 102. So if certain signals, I would actually trade. If it's a stock trade, I would trade them in the Profit Accelerator. Profit Accelerator is actually my positions and all of my orders. If you decide to become a member, you can go to SMS, enter your phone number, and you will actually get a text message every time I trade. Or you can go to Dynamic Power Trader, and this is going to be a combination of both stock and option trades, right? So if you look at the last 7 days, there's more signals, like I'm trying to exit IBM position. I got into General Electric position using option spreads. And this is the opening transaction, and then these are the closing transaction. I closed EQT spread, and I also closed Oracle spread. So you can basically have combination of, if you're looking just for signals, if just looking at signals, then it's aggressive power trader or weekly power trader, right? Aggressive power trader, short term gets updated every day. A weekly power trader, it's every week on Sunday, right? Every week on Sunday, signals are published, so you can see eBay again, Google, BSX, Walmart, Zscaler, some of the signals that were published, on Friday. On Sunday. And some of them I trade. Like I have been trading Walmart, Zscaler. And that's about it. So that's weekly power trader, right? And again, we're always suggest to only have 4 active positions and not to risk more than 2.5% of account value per position. If I trade them, you will see the orders, right? You'll see the orders like Zscaler and Walmart. You'll see the orders. You'll see my positions in some of these names. You can look at the history of these signals, right? On weekly power trader, it's every week. On active trader, it's short term every day. And most important, you can participate in live trading room recordings, live trading room. So there is a live trading room every day. Keith and I run these live trading rooms. My background is more technology, artificial intelligence, running large IT departments, but managing my own money for the past 25 years. Keith's background is more of a trader working for hedge funds. He's an ex-market maker. He intimately understands options trading. And there's other workshop you can watch if you want to learn about options, right? If you want to learn about stocks, moving average, if you want to learn about moving averages, right? You can search for some of these names and, look at, we have at this point, 14, 15 years worth of webinars on education. And this is a free education that you can find on the recordings. Any questions on our services? So Profit Accelerator, stock trades only. This is the actual trades. You can participate in live trading room and watch them, or you can watch the recordings. Dynamic Power Trader, both stock and option. Again, you get SMS message, you get email every time I trade. And then finally, Earnings Power Trader is where these are short-term aggressive trades meant to be more aggressive, right? If Dynamic Power Trader and Profit Accelerator, I trade stock or option spreads, which consider to be the more conservative approach. Here, I'm trying to find these outsized returns like Broadcom. Right, Broadcom is announcing earnings on Thursday, and I'm buying a debit calendar spread for $1.20. Right, and if Broadcom has a strong earnings and it does move in the level that we expect, right, 275, 280 on the positive news. I mean, it could go the other way on the negative news. But if there's a positive news, like in the past 4 earnings, it did move sometimes 10 to 20%. So if it's going to be similar to NVIDIA earnings, where it's positive outcome, right, and you can look at the positioning, right, the biggest positioning right now on one standard deviation is the 270 strike. But, just because people position at 270, that doesn't mean it's going to reach 270 or 280 level. But if it's a positive earnings, there is a high probability that it could get close to that level, right? So then I'm risking $1.20, but, you can make 100%, 200%, 300% return in a short period of time. And I'm subsidizing this trade with the credit put spread, right? So, here the risk is it's a $2.50 spread. So if I'm wrong, and Broadcom actually going to miss the earnings and moves basically, to one standard deviation to the downside, gets 230, then this would be a losing trade, right? If it has similar earnings as back in September. So this is more aggressive trading, mostly is options, where sometimes I do butterflies, sometimes I do iron condors, sometimes I do calendars, just depends on volatility and the view on the market. But these are meant to be well-defined risk, but looking for outsized returns, right? Like triple-digit returns. Any questions on earnings power trader? All right. Any questions in general? All right, so we talked about recordings where you can find free content. Every Sunday, we publish a blog. right? So you can see, I mean, I try to talk about my life and, market in general, but, this Sunday publish, a blog on CrowdStrike. So, and Zscaler. So if you can add, info@yellowtunnel.com, then you will get an email. Hopefully it will not be in your, promotional or junk box. So just add info@yellowtunnel.com to your list of contacts. And then every Sunday we're going to publish the blog, which you can watch. And usually, by Wednesday, I would publish this video where you can see general market conditions and trade ideas. So all of that is free. There are other videos that I went over in recordings and trading discipline that talks about, different concepts like bullish call spread and stuff like that. Your signals are ambiguous, do not show buy or sell. So in active trader, we don't publish bearish signal, not in these services. So you can assume these are all bullish signals, right? That these are all bullish signals. And the idea, we do have buy sell level. So idea, let's say eBay, the idea is to buy at 72, but once it reaches 76, like it is now, that's you probably too late, right? So you want to buy in the dip, right? So eBay, when it opened, if you look at the 15-minute chart, right, when it opened, it was at 74.50. So the idea here is that you would buy, I mean, still not at 72, that's the predicted low, right? But you can see it's the open print, $74. So the idea is that you would buy it, I usually wait 15 minutes to make sure, but let's say you buy at 73 or 74, right? And then you have a very large move to the upside. But this is a buy signal. And at 76, model basically says, based on our projections for short-term trading, right? This is short-term trading. It's a little bit too late for eBay. Nuker, on the other hand, is at 119. Let's see something. Philip Morris. So Philip Morris. So Philip Morris is 181. We predicted 181 because of the market rally. Philip Morris pulled back. So this is an opportunity for you to buy, right? You wait 15 minutes, stop selling, for the sell-off to stop, and then you enter the position because we think it will get to 184, and probably still not too late to enter the signal. So these are all bullish signals with the buy and sell zone, right? It gives you a buy level and a sell level, and it also gives you long-term. For eBay, we still think that long-term it's an uptrend. Philip Morris, we think long-term is an uptrend. Nucor, actually long-term, we think it's a downtrend, right? But short-term, it is an uptrend. Right? So long-term Nucor is a downtrend, but short-term, it's an uptrend. All action says buy to open, sell to open. Well, I mean, it does require you to kind of understand options terminology. So, I mean, if it says buy or sell to close on single leg, so it's a buy, right? So let's say Walmart, right? So if you look at the Walmart, sorry, let's look at the dynamic power trader. So this is a Walmart trade. Sorry, let's do Zscaler, CrowdStrike. So if it says buy to open and it's a stock, then I mean I'm long the stock, right? So that's not ambiguous. So it means you're long. If you're doing like a spread, CrowdStrike, sorry, like Oracle, right? So let's do Oracle. Then it does tell you if you're opening position or closing. So sell to close, buy to close, meaning I'm closing. And then you just need to kind of, understand options that this is a credit transaction, right? So if I'm selling call spread for a credit, right, that this was a long transaction, right? I was long. Originally I bought 140, right? If I do this 30 days, right? Originally when I bought the trade here, I bought 140 call, right? and sold 145 for a debit. So if it's a debit call spread, then it's a bullish trade, right? Bullish. Sometimes I do hedge, which is would be a bearish, but you just need to kind of understand, spreads and understand which one is a bullish, or which call is a bullish call, which call is bearish spread. And we have videos that explain that. But in the email, I do describe, that this is a buy signal and gives you basically individual trades. Tim, let me know if it makes sense. Spread by toast. Got it, Tim. Okay. Oh, I see. Yeah, earnings. Sometimes I can go both, be bullish and bearish positions, but same idea. Yeah, you have to look at the buy to open, sell to open, and understand that, this is example of a calendar spread. It's a debit, so I'm bullish, right? So it's a debit calendar call spread, so it's a bullish transaction, right? The market has to move to this level for you to be profitable. Perfect, Tim. Thank you. Okay, so clarify. So yeah, open it. You can always call your broker dealer where you trade, and they can help you out with some of these terms as well. Or you can watch the videos, right? We do have videos. If you want to learn, you can go to active workshop, type in the word option spread, right? And then you can see numerous workshops where we actually describe how to trade options, spreads, butterflies, and condors to help you understand. Any questions? All right. So that's Yellow Tunnel and some of the services we offer. So be sure, the free content, there's a lot of education. So you can watch the webinar recordings, you can get an email with a blog. So I encourage you to add info@yellowtunnel.com. You can participate in these events, right? They're free. So hopefully next Tuesday, same time, right? 12 o'clock Central, 1 p.m. Eastern. We're going to talk about unemployment data. We're going to have unemployment data. We're going to have Broadcom earnings. And we'll see if we were right? If the SPX is broken or not, right? Right now it's kind of a marginal new highs, but that the trend could continue. Any other questions? And in terms of market condition, I think the most important is yield, right? The risk to being more or less bullish or market neutral is that the yield has to stay in the range, right? Somewhere between, I would say, well, year-to-date high. So as long as we're between 4,800 and 3,900, I think that overall this is positive for the market. Obviously, when it gets to 4,600, or especially 30-year, when it got to 515, made new highs, that's bearish. But as long as it's in range bound, this is positive. So I think the risk to the market is that the yields are either gonna make new highs, the 10-year or 30-year makes new highs, right? Or dollar continues to sell off, that would probably create some instability in the market. Any other questions? Naked wood, maybe. So Cho had a great question. Why not sell naked put? So you can do, especially cash secured put, but it requires higher capital requirements, right? It's a very capital intensive trades. So Broadcom selling even one contract of Broadcom, that means if you're going to get a sign, right? Let's say you sell 230 put. That means you own $23,000 of Broadcom. And if you have a large portfolio, right, probably 100,000 or 200,000, then that would be the right strategy, right? But if you have a smaller portfolio, then I would either do a put spread, right, to limit your loss. But in general, cash secured puts or naked puts is geared toward someone who has a large portfolio and wants to own the stock, right? Because you don't know what is going to happen to Broadcom, right? The expectation based on the current supply and demand of the data, it's either going to be at 230 or 280 on positive and negative surprise. Obviously, most of the time it's going to just like NVIDIA do nothing, right? Most of the time NVIDIA, even though it did move in the right direction, right? But you know, it in 2 days it gave up all of the gains. I mean, it continues to rally now. Tim, you still have Nvidia? Not sure if you closed it, but you know, we'll see after Broadcom. It could get to 150. But anyway, right? Most of the time, stocks are trading within one standard deviation, right? Then that trade will not work. The short put will work, but if it has negative news and you know the stock does drop 10%, let's say to 230 to 40 level, you have to have a large portfolio to be able to own the stock. Otherwise, the losses would be significantly higher than 2.5% of your portfolio, right? And that's the rule you want to avoid. What we do, you know, one of the reasons for yellow tunnel is trading psychology. And in trading psychology, we talked about that you have to predict how, not only what the market will do, but how will you behave, right? What will you do if you own a short put on Nvidia, on Broadcom, and it drops to 230, right? It misses earnings for whatever reason, right? How would you feel? You know, some people like, you know, we have Chuck, he, you know, the cheaper he can buy Broadcom, the better, because he wants to own the stock, sell calls against it, and he's a long-term holder. But if you have a small account, you know, that what if scenario going through them is very important, right? Because we always kind of split between two fears, right? Going back to, so one is the fear of missing out. The AI revolution is here and Broadcom is one of the strongest stocks and I'm going to miss that 10, 20% move to the upside. And the other one is fear of future regret, right? That I sold the short put, I got a sign on it and I lost, you know, 5, 10% of my portfolio, right? You want to avoid both. You want to avoid both. Spreads usually allow you to place a well-defined investments where you know exactly what your losses are. So I would encourage you to consider spreads as opposed to short options. You could roll, right? So again, selling naked puts or cash secured puts, like for the stock like a Broadcom, I would say, you know, you should probably don't want to put more than 20% of your portfolio in the trade. So that means you have to have $100,000. That's because you could have where it misses the earnings and then Trump comes out and says we're going to put 100% tariffs on China, and then all of a sudden Broadcom is a $200 stock, right? So then what does your portfolio look like, right? And what kind of drawdown do you have? Not 14. All right, Tim, you're making money on Nvidia. Very nice. Well, we'll see. I mean, I think it's going to be bullish, but you know, we'll see. But you know, you cannot dismiss, right? You always have to consider this fear of future regret, right? There's always unknowns in the stock market, right? Otherwise, we would just have chatbots, right? Chat GPT trade on behalf of us. There's always going to be some uncertainty and unknowns that you have to take into account, right? That what if scenario? What if Broadcom doesn't go in my direction and it drops 10%? You know, if you're down 1%, okay, you move on to another trade. If you're down, you know, 5, 10%, it could take you a while to recover from that trade. And we want to avoid that. That's why keeping journal is important, keeping trading plan is important. All right, guys, you've been great. Any other questions? A lot of people today. Thank you for participation. Joe, welcome. George, Mark, Dr. Simon, Peter, Ron, Tariq, Tim. So we do offer, you know, 30-day trial. You can try any of these services, especially if you're looking for signals or you're looking for live trading room, or if you want to see what I trade and what Keith are trading. You're definitely going to get a lot of idea generation, and these are actual signals and trade. These are actual trades, right? Trades on the exchange. So I encourage you to consider 30-day free trial. If not, you know, then next Tuesday, same time. Let's get together for the, you know, and review some of the new trade ideas. Tim, when are you going to join live trading room? You got to start alternating. Maybe you're going to get better trade ideas from our live trading room. Too tied up. Okay, no problem. I'm just making jokes. But you know, you can obviously get SMS message. You don't have to be in live trading room. You can enter your phone number and you get SMS message. You'll get an email as well. All right, guys. Thank you very much for your support. Thank you for attending, and I will see you next week, or maybe in the live trading room tomorrow. All right. Thank you. Take care. All right. Thanks, Tim. Appreciate it. Take care, guys.